Hi everyone, just diving into Holochain hot. Once again, thank you for your continued support across the channel here. Sharing is caring on CoinsKid. I really do appreciate everything that you do to contribute towards the growth of CoinsKid here. So it's all good, it's golden. Thank you very much. So just going to dive into hot right now. You can see it's had that beautiful pump off our target right there, okay, and it had that recovery and it's come up, but it's not out the woods yet. I'm going to be fully transparent with you. That was a nice little upside. That was a 67% pump, and it's currently 40% pump off the bottom, our target, which we said if it was break down, put some bids in because it's a previous swing low there, previous swing high, sorry. You can see it's a key level of resistance right there, and like I said to you, resistance, when you break it, you always want to back test it as support, and that's exactly what it's done just there. Okay, so right now, I'm not going to lie to you, hot is still caught in a downtrend. It's got the bearish cross on the hourly time frame, and you see it's coming back up, hitting its head, and it's continued to do so. So with that, you know, you can't avoid the fact that if you can keep continuing to do that, you're going to get forced back down to retest these lower lows here and potentially test that. And if you was to lose that, then I want to give you another level of support which you would actually see hot bounce from. So what you do, you've got this swing high that's gone up like that, and you form the swing low. Do you see this base here? So that is a previous swing low, and that is a particular target. You can see multiple levels of support just there. So I would anticipate that if hot was to break down anymore and you see it roll over and the market collapse, do anticipate that is a fantastic area to put some bids in to get that bounce again, just like we got here where it's bouncing. You had that really good recovery. You could expect, if it does lose this particular level, now keep an eye on this, if it loses that particular level and starts to correct even more, then I would see hot bounce there. Because right now on the hourly time frame, I'm just going to zoom in because I think I see something on the hourly time frame. You'll be able to see it more on the hourly. Yeah, so you got this sort of ascending wedge. Do you see this ascending channel type pattern which it's broken out of? So it looks like it's on its way down. I'll be honest with you, if it continues to creep along like this, so you've got this kind of wedge type pattern going on here. Do you see this from this bottom, and it was getting tighter and tighter? Do you see this? It's gone up like that, and it's actually broken out of it. Now the breakdown target is where you form the wedge, and obviously that's there. So you could see further downsides carry out that pattern correction just there, roughly from here down to that sort of level there. An extra 20% correction for hot. So do keep an eye on that, because if it does continue to hit its head on the hourly time frame here as a resistance, okay, and fails to get through it and march on, then you will see it roll over and come back down to test that level there. So do keep an eye on that. That's basically a rising wedge, and it's a very bearish pattern. It's a reversal pattern. See, it went up and got tight, boom, and it's already fallen out of it. Okay, it's not fell right down to the target yet, but usually when these patterns are in play, they're in play until invalidated away. And at the moment, the only way it can be invalidated is if this comes back up above this and starts to march on. So do keep an eye on that particular level right there. So I'm going to remove that. So what I'm saying to you is you could see hot roll over and come back down to test this level here, which is where it formed a wedge. So do keep an eye on that particular level there. So what we're going to do is zoom out on the 4 hourly time frame here. So as you can see right now, you are in a downtrend. You're coming down, and if you lose that key level of support right here, which you see the wick down to the previous swing high, if you do lose that, then obviously target the previous swing low just there, and that is a whopping correction from here. If it was to roll over, that's another whopping 46% correction right there for hot. So it's not good. It's not good. I'm not going to lie to you. I'm always going to tell you how I see it. The recovery, it looks great, but we're still in a downtrend. So what you do need to see, obviously, is hot get above that, and then back test these EMAs and march on, because what that would start to do, it'll pull these EMAs in, start to get the bullish cross, and it will just get the reversal that it's looking for. But at the moment, I'm not seeing that. I'm not seeing that at the moment for hot, to be honest with you. But nothing I should say should be taken as financial advice. If we zoom out on the daily, okay, so on the daily, you can see we're under the EMA, which is contributing to your downtrend at the moment. And it's almost a ticket to say, it's just confirmation to say, you know, I'm pushing you down. I want you to come down and test lower levels of support. But essentially, this lower level of support we've got in for ourselves. And again, look, you can see if it was to come down and it's swing low just there, do you see that? And you can see if it lost that, you would start to come down to that swing low. So that would be an even greater correction for hot. And this is the trouble with things when they go up so much and get a little bit overextended. When they roll over, they tend to fall harder. Okay, so like you can see, this swing high here went up, got a little bit overextended from that swing high, because that's what happens when it goes up. You want to see it back testing the previous swing high. Otherwise, it's getting overextended and it's growing unorganically. So remember that moving forward, you want to see things going up like this. Okay, nice, not like this and getting overextended and big gaps between each level of consolidation, because that's what it does. Things that go up nicely, they go up and they sit on the previous level. You see that? See how that previous swing low sat on that swing high there, that went up there and it formed that swing high, and then when that went up, it rested on nothing. I remember making the video at the time. It got overextended and just there, that went up, overextended, no swing high to sit back on, and then this went up, got overextended, come back down, and it sat on that swing low just there, swing high, sorry. So it's all good. This is good so far for continuation, but the more you sort of keep getting caught under this daily as well, the more it's asking you to come back down to retest that key level of support, potentially forcing you down to that previous swing low, and then potentially forcing you down to that swing high. And that's how it works. It will just keep forcing you down to test levels of support. So as long as you don't start losing the weekly, and this is the most important time frame that you can't start losing, is the weekly time frame. If you start losing these lines on the weekly, that's bear market material, and I don't anticipate that will actually happen for HOT. I do think that what you're doing, you're coming down, you're getting the test off of 20 with beautiful. I mean, look where that is now. That's perfect. Okay, I'm not gonna lie to you, that's perfect. That's coming up nice. So you consolidating, back testing this yellow line, this red line is going to get healthier, back testing, boom, and away you go, and you're going to start forming these nice waves up again in this continuation of this bull trend. So yeah, it's just asking for back test of levels of support basically. I've gave you your breakdown targets there on the 4 hourly time frame, again on the hourly as well. So again, you do need to see yourself get back above these EMAs, because otherwise you are just going to keep coming down. You can see it sitting its head on it as resistance. Look, so right now you do have this pattern breakout, and I will give you this target just there. You see this particular target just there. If you see HOT break that key level of resistance, you will see a nice pump for HOT, and that would bring you back above these EMAs as well. Always be aware of every single target. Okay, so right now what you've done, you've created this double bottom type pattern that you've got going on, where you've basically come down, you've created a low, you're coming back up, and you're hitting a level of resistance. And if you can break that level of resistance right now at 0.01379 at 971, sorry, you will see a lovely little pump for HOT of roughly round about that, which would bring you back above these EMAs, and you back test them as support, and that recovery will look golden. So yeah, that's a potential play. If you was to see it break that particular level, get through these EMAs, back test support, you could be looking at a lovely little 27% long opportunity there for HOT. So that's basically it. That's an update on the ins and outs and potentially what it could do. Okay, do keep an eye on these particular price targets here. You've got this one, it breaks as resistance, turn into support. You've got a lovely support, you've got a lovely trade there. And then again, if you start to lose this particular level right down here, this rock bottom, then you would be looking to go short down to this particular level. And I will drop that in for you as well, just so you know. And that's the bearish scenario right there if the market does roll over again. Okay, so far it's okay, it's looking reasonably healthy that it's coming up, but you do want to see it get back above this yellow line on the 4 hour, get above it, back test it as support, and then march on and take out this resistance, because you can see you've not done it. You're hitting your head, you're hitting your head, you're hitting your head, you're hitting your head. Even in the recovery, you come up, you've hit your head on it. You've wicked to the red line, but you're not actually getting above the yellow line. So it's contributing, pushing you down. That's why I'm giving you lower level targets. And again, if you do see it roll over, put some cheeky bids into there if it was to lose this particular level, because I would expect it to bounce there, and that would be a really, really nice sort of correction over and done with for HOT in the continuation of the bull market. So that's basically it. Take care, everyone. Stay strong, stay safe, and most importantly, stay tuned. And I'll be back tomorrow with a HOT update. Bye bye.